It is expensive. It is premium at this point, and we could have periods of sell-off. But U.S. continues to be a market that has surprised on the upside again and again, and has continued to prove the critics wrong. The growth is real. Unemployment numbers are still in control, and so we don't think that the U.S. growth will falter. And on a global scale, U.S. still is the dominant force. It is still in the driver's seat. So the Trump trade could unwind a little bit, but that also gives you the opportunity to buy on the dip. We do think, though, that this year, whether it is U.S., whether it is Asia, we have to be a lot more selective and a lot more reactive. We don't know what the tariffs will be. It just depends on what side of the bed someone wakes up, right?
Which is probably true.
So we'll have to wait. We'll have to be very, very patient. We have to brace for volatility this year. It will present opportunities, but yes, we'll have to be extremely alert and be able to separate out the noise from what is actually the...
Mishra, I want to sort of get into the macro and try and deconstruct it a little bit. You were saying that there's not a strong likelihood that the U.S. will falter. How is that going to happen? Is it going to be because tax cuts, that's positive, right? Deregulation is positive, et cetera. The downside to that, right, inflationary pressure that could be caused by those policies, offset by, among other things, of course, you've got, deregulation falls on that side. Lowering energy costs falls on that side. Is it going to be the ability to cut costs, though? What DOGE is in charge of, which is going to make up the difference. Is that what you're betting on?
No, that is. So there are a lot of conflicting agendas within the new incoming administration, right? So we're talking about tax cuts, but we are also talking about increasing savings. We also don't want the debt to increase significantly. So we still need to see exactly what they focus on. I think the bigger risk is where the consumer is in the U.S. at this point. We're seeing consumer spending. We've seen that resilience. We've seen a little bit of jitters in recent data, and that's partially also driven by the consumer being aware, or at least the businesses being aware, that the tariffs could be inflationary. Well, just to give you a comparison, U.S. savings rate is around 4% right now. Compare that to the Europe, it's 14%. That also talks about the lack of confidence in the European consumer. But 4% is steadily declined from the peaks of the pandemic. So that could unwind, and that could unwind quite quickly.